This week, five of the largest companies on Earth reported earnings and beat expectations. At the same time, the Fed held rates stable as U.S. inflation ticked up again. In China, exports continue to prop up GDP growth, but some cracks are starting to show beneath the surface, with consumer spending and sectors like toy manufacturing under pressure. In television, sports remain the brightest spot, really the most reliable audience growth story in linear, while the broader TV ad market continues to lose share. But the story of this earnings season is what happened at Alphabet, Amazon, Meta, Microsoft, and Apple. Big billion-dollar quarter from those four. Digital advertising growth that continues to defy pretty much every macro headline. And AI isn't just shaping how ads are targeted, but how commerce itself is conducted. Let's get into it. You're listening to the Media Intelligence Podcast from WPP Media. I'm Kate Scott Dawkins with Jeff Foster from the Business Intelligence team, and each week we unpack the biggest stories in media and marketing and why they matter for brands. So it's been an extraordinary earnings week. We've now heard from those companies I listed in the outset: Alphabet, Amazon, Meta, Microsoft, Apple, plus others like Reddit and Roku, a number of advertisers as well. But really, amongst these big sellers, the picture they are collectively painting is one of a digital advertising market that is not just healthy, but accelerating, really, in ways that should force us to really consider some fundamental assumptions about where economic value is being created in 2026 and how much advertising follows or doesn't, right, is decoupling from broader economic growth and GDP figures.
Oh, I was going to say, just to piggyback off of that, just an incredible streak of earnings, especially on Wednesday, was sort of like the Super Bowl of earnings, especially for digital advertising. And yeah, like you said, the picture it paints is just a stark reality for some of the traditional media companies that have already reported.
Yeah, well, let's start with some headline numbers. Google search revenue grew 19% year over year. Meta's advertising grew 33% or 29% in constant currency. Amazon was at 22% for another straight quarter. Reddit, admittedly smaller base, but they were above 60% again in constant currency growth. So really, those are some phenomenal numbers. And this is happening in a quarter where the macro conversation really is dominated by inflation, oil shocks, food supply concerns, stagnation potentially in Japan and Europe, and yet, ad growth continues. So how are we squaring that narrative, right? I mean, we're going to come out with our forecast next month. It is now next month. When this releases, it will be May. So, that's a tricky needle to thread in saying that, yes, the outlook for the overall economy is not great, and yet this sector of the economy is really booming.
Yeah, I think that's a good point. Taking it at face value, it's a little hard to wrap your head around. But when you see the numbers, I mean, that's what we're seeing in the data, where you have these two distinct phenomenons going on, especially like you just mentioned, like when you're looking at 20-30% growth from some of these largest, digital ad sellers and largest ad sellers on the planet. It's astounding. And I think, kind of goes back to that theme of creative destruction as we see more and more businesses being created coming online, which is, increasing the size of the advertising industry on a global scale. And I think we can definitely see that reflected on the digital side so far in the earnings.
Yeah, so there are a few themes I think that emerged. We're not going to go through and list all the different numbers because that would be a very boring podcast indeed. So we've tried to level it up to a few themes here to really simplify the crush of numbers that we heard this week. The first is really AI-driven performance improvement, right? Every single one of those major companies reported that AI is materially improving advertising outcomes. Meta talked about their adaptive ranking model, a trillion parameter inference system, driving improvement in conversions. Google talked about you know, 30% of search spend now flowing through AI-enabled campaign types, and advertisers using those formats to, again, get more conversions for the same budget. So we're talking about noticeable effectiveness improvements being claimed by these companies. Amazon talked about Rufus in terms of the number of users that are interacting with it, engagement growing. Reddit talked about improvement on their dynamic product ad returns. So it was a really strong theme across everyone, right? In that, yes, we're spending a lot on AI CapEx, but for most of these companies, it's being realized back in the business in terms of improving services either for themselves and their own products and offerings, and
Mhm.
then also for end customers as well, right? And, as more spend moves into these platforms, right, with that improving sort of effectiveness, we're also seeing things like pricing power, right?
Mhm.
So Meta's average ad price rose 12%. Globally, impressions also rose. That's a continuing theme over the last several quarters. And the question there, and we'll maybe come back to it, is just how much more room does that have in terms of that pricing power?
Yeah, it's a great question. I know we'll touch on that later, but it's something that, I definitely was thinking about going through all the earnings transcripts.
Yeah, it points to sort of a structural share shift, right? Which is something we introduced in the cold open, but we're talking about total television globally, including streaming, falling from 14.6% of global ad spend last year to 13.9, and then down to under 12 by 2030, with audio, newspapers, and magazines also declining in overall share. Out of home holds up better, but stays roughly flat. And so the sort of channel benefiting from all of this is ultimately digital in a broad sense, but really what we mean by that is search and retail and social for the most part. And now AI search and chat, which again will be a new channel or segment that we start reporting on in June's this year, next year.
Yeah, exactly. And I think, from when we start seeing more and more of like the traditional media owners starting to report, it's going to be very interesting to see how they talk about AI and how that's, if that is something that they view as, creating more value, especially attracting small and medium sized advertisers. I think that's just something personally I'm curious to see, the commentary on that.
Well, how they talk about the macro, right? We've seen this
Hmm.
before where if they take a very narrow slice, sometimes they will say there's softness in the ad market. I think that statement gets very difficult to say now when you have, as we've said, sort of 20-30% growth from some players in the ad market. So it's obviously not the overall ad market that is soft, but maybe certain segments of it. So you
Yeah.
mentioned, creative destruction and this expansion of advertisers, and that's one of the third themes that I think came out as this expansion of who's advertising, and how many different types of services they're using on all these platforms, right? Meta again talked about advertisers using its generative AI creative tools, that long tail of advertisers that makes up the majority of their ad revenue. Roku's ads manager saw advertisers increase. Reddit is scaling max campaigns. We heard this again across a lot
Hmm.
of those companies talking about expansion into new customers. And then we're also seeing this category of AI-endemic advertisers. Again, the OpenAIs, Anthropics, all those AI startups that are spending venture capital money before their IPOs to, make sure they have the revenue growth and the user growth they need as they're either looking at IPOs or
Hmm.
looking at new funding rounds. Right? And then we heard some familiar names and companies that were talking about the strongest sectors for them in terms of advertising growth. Financial services came
Hmm.
up, if we remember from what the last pod or the pod
Yeah, the
before when
previous
we
one.
talked
Yep.
with Nitty about it's like over 20% growth in their overall ad expense
Yep.
for US banks. So that was unsurprising to hear that financial was one of the big ones. And then retail, again,
Yeah.
commerce, right? So with data from China suggesting that exports are still keeping up for the
Hmm.
most part around the world. We assume that there is still a significant amount of growth where those companies are targeting consumers in markets around the world,
Hmm.
right? Support the exports coming out of there. So um, anticipate that continues. The other one we heard
Yeah.
was health from
Yeah.
Google, which if we take a look at financial services and health in particular, these are historically two of the advertiser categories that have been less penetrated into
Mhm.
digital, which with the expansion of those means there's still runway. We have not seen the end of this sort of supersized growth. There's a lot of room for those companies to continue to build in these digital channels and digital platforms, right?
Yeah, absolutely, and especially with looking at healthcare and pharma, they're just massive spenders that, maybe leans a little bit more towards traditional television. Obviously, there's a lot of regulatory factors around the world that factor into that as well. But yeah, I think, that they're seeing those tailwinds with healthcare and pharma. I mean, it just could even add to even more growth, which again is just it's just astounding when you start thinking about it.
Yeah, and we're talking about, aging populations, right,
Hmm.
that are gonna have more health needs. We're talking about AI potentially speeding up drug discovery, which
Hmm.
will then create more opportunities for advertising. So that health sector, I think, is one that we're gonna be continuing to discuss quite a lot
Yeah.
over the coming months and years even.
Exactly, especially seeing that there's gonna be this, patent cliff coming up relatively soon, so you're gonna be seeing a lot of activity, especially on the M&A side, which would probably support even more advertising growth as companies, just try to capture that market share and find those next big drugs and try to market them.
Yeah. So next theme we definitely heard a lot about was agentic commerce. Certainly on the Google side and the Amazon side in particular, Google talked about their universal commerce protocol, adding more partners into that, including Amazon, Meta, Microsoft, Salesforce, Stripe, and Shopify. And then Amazon talked about Rufus being able to track prices and auto buy when products hit a certain target. Meta talking about building shopping into their standalone apps. So lots and lots of
Yeah,
discussion about this potentially collapsing the purchase funnel. This is a major
yeah,
theme as well in this year, next year that we're going to be talking a lot about over the next month. So definitely looking at those companies building out the intelligence layer in
yep.
order to be able to provide this proactive messaging and agentic commerce.
Yeah, and the funny thing is, it always makes me think about, like, more on the financial side, buying and selling stocks, like putting in a sell order or buy order. When I heard about that at Rufus, I'm like, "Oh, it's kind of like, I can just put a target price I wanna, buy a product in, and it'll take care of everything," and, and then I'll just get a confirmation at the end of the day.
Yeah. Yeah, and obviously humans are still very
You're
we're
right.
talking about you deciding on something and then just, automating the actual purchase part of it, but
Correct, yeah.
there are those are roots into automating more and more of that decision-making process as well, right?
Yeah, and I think as more and more people get comfortable with it, obviously, we'll just see this continue to accelerate.
Yeah, it's that part's interesting. Certainly kids growing up now are experiencing this world where agents and assistants
Mhm.
are just sort of part and parcel, right?
Yep.
They're on infotainment systems in the car, they're on smart home speakers, they're on phones if they see their parents using them. There's this sense that, you can ask for anything and the answer is going to be free, quick, and personalized,
Yeah.
which I think is another sort of watch out for quality content and publishers in the sense
Mhm.
that there's less of a familiarity of, oh, I pay for a newspaper subscription and a
Yeah.
newspaper comes to my home and it's just the same newspaper everyone else gets. And I'm paying for this discrete one source of information versus having this agent collate all the world's
Right.
information and provide something to me for free, right? Those
Right.
cost mechanisms are not visible to kids growing up now.
Yeah, exactly. Kind of makes you think about, kind of sort of the reinvention of the value proposition is like you said, especially for a lot of these publishers that, are used to maybe the older generations that have familiarity with that brand name, whether it's the New York Times, the Wall Street Journal, something along those lines. Oh yeah, we're probably heading into a world where that may not mean as much as it used to.
Yeah. Well, speaking of obscuring the value chain, Apple, uh, it's always a little bit opaque.
Yep.
So you have to read between the lines a little bit there. I mean, it was up. There was strong iPhone growth, which I think was a positive for the stock movement, given there have been wobbles
Hmm.
recently, especially with China iPhone sales and some other pieces. Services hit over $30 billion, up 16%. That, of course, is where advertising lives, although they do not tell us anything about advertising. And even when analysts on the call asked specifically about advertising, there was nothing given in response to that other than it's growing.
Yep.
So, not very helpful for our purposes. We have our own estimates for close to $10 billion this year, probably for Apple. Some of that's off the back of what we can see in terms of them growing ad surfaces and
Mhm.
team members, right? Sales
Mhm.
team members. They talked about adding ads to maps coming
Mhm.
out. So I think they're definitely looking at that as a larger portion potentially of that services mix. Whether that eventually gets to a size where they have to start reporting on it individually, I don't know. Of course, we'd prefer that, but there we go. I will also note, and this is a personal observation from reading and listening to the call itself, um, Apple's AI narrative, continues to be masterfully vague, is maybe, or I don't know if that's the right term, but they repeatedly credited Apple's silicon and on-device processing for AI capabilities. They did mention the collaboration with Google, but they
Mhm.
never uttered the word Gemini. There was no mention of the fact that, that's the model that's powering some of this Apple intelligence. So just, I mean, of course, but it's an interesting
Yeah.
thing to note, right? That they're definitely downplaying that and wanting to rely on the conversation about the silicon and how good the devices are for running
Yeah.
AI.
Yeah, they definitely, are masterful at shifting it back to more the hardware and that side of the business of, rather than pinpointing a lot of on the AI strategy.
I mean, it's a question I've raised on this podcast before, right? Which is sort of these two potential future visions, and now I'm gravitating towards the third option. Option one is you get model commoditization, where the open source models or local models, right, like Gemma 4 from Google,
Mhm.
get so good and comparative that it's really more about the hardware you're using. That's the relationship consumers have, and they just
Mhm.
can apply any model, or maybe they don't even see the model layer so much, right? It's branded as the hardware. That's sort of Apple's rationalization for how they've approached investment. Even though they are now increasing R&D, they haven't been spending like the hyperscalers have. The sort of option two is a world where the model companies build enough differentiation in their services and the intelligence layer and the data that, that's where you have your main relationship. You are a
Mhm.
Gemini user or a
Okay.
Claude
Mhm.
user or whatever, and you just take that to any hardware, and the hardware has to be interoperable, right, with any of
Right.
those models. And that works, in Europe and the US the same way it works in China, just with a
Mhm.
different stack, right? Where
Right.
you have maybe an Alibaba Quen model on Xiaomi hardware or whatever,
Right.
right? Or there's the third option, which I think is where we're heading, which is neither of those things. And it's really messy, and people continue to use this model over here on this tech and this model over here for this thing. And the important layer then is sort of the orchestration, who can connect the data across those different providers or partners.
Mhm.
And then you're looking at, who has the best federated approach. Things like the InfoSum data bunkers become
Mhm.
important to be able to
Yep.
allow advertisers to see across these things, because there isn't just one platform that
Right.
is capable of doing everything. So that's where my head is at as we're listening to all these earnings calls. I don't know if you have a thought on those.
Yeah, no, I think after you laid out the 3 scenarios, I think I'm in your camp too on the third one. I mean, just again, purely anecdotal. I know I'm using different models on different devices, whether it's work, personal, across the board, which would then complicate things as far as you like you said, getting that sort of all that data from a targeting or user standpoint or platform standpoint, getting that all under one roof and how would that work? And also from a consumer standpoint of like, wait, I was doing something on this model. How come it's not translating over? Wait, I think I asked Gemini something, and how do I get Claude to join that conversation? So I think you're going to see a lot of that sort of patterns as more and more people use it at work and use it personally. I think that's the scenario that we seem to be heading towards.
I do want the company that creates like a cage match for agents. I want to be
Right.
able to throw the same question in and let
And
them
see.
debate each other in real time is what I want,
Right.
really. Yeah. Um one other thing on those big companies maybe that not everyone maybe clocked this week. I saw it off of a blog post that Eric Seufert wrote, who's the author of Mobile DevMo. He wrote about Meta's expansion into advertiser site
Mhm.
data, basically. They did not talk about this on the call, which is very interesting, I think, given what they want to highlight and what they don't want to
Mhm.
highlight to people in this world. Companies always make choices, right? And so our job, I think, as analysts is to read into what was said, what wasn't said, and why that should matter for advertisers. In this sense, or in this example, Meta is introducing, from my reading of everything and sorry for its analysis, Pixel, introducing updates to their Pixel that use AI to automatically capture product information, names, availability, even pricing from advertiser pages, right? Without the
Right.
advertiser needing
The
to orchestrate any of that. So I think Meta's framing is that from a performance standpoint, it reduces operational friction, right? Especially for smaller companies that don't have teams running things like APIs, right? Makes sense. But it's interesting in that one of the key beneficiaries of that is really probably Meta itself, right?
mhm.
They're then using that data
The data.
to be able to optimize their systems. And that then ultimately sort of determines what you're likely to pay for that next impression and makes it easier for you to spend even more money on their site. So, really interesting. I definitely want to continue to follow that and follow more of their business led innovations in WhatsApp. But I think important for brands, for advertisers to really think about data governance strategy as being part and parcel as important as media strategy, right? In this world where we're moving to more and more automated commerce. So, understanding what signals you're sharing through what mechanisms, how those signals price your future media. And these are conversations that are probably going to involve CMO as well as
Mhm.
CIO as well as procurement. So, super interesting. I thought was worth a closer look if people didn't catch that given all the other news happening this week.
No, that's very easy to overlook that, but I think it's a great point. It's sort of like what you're seeing on the consumer side with it's what's the old adage: if you can't figure out who the product is, then it's you. You almost might be seeing a little bit of that from the business standpoint, since that they're surfacing all this data from these small and medium sized businesses who may not be able to capture that on their own, or like you said, have the tech to support that type of operation on their own, and then Meta is sort of stepping in there and capturing all that data and then using it to their own advantage.
Yeah. All right. One last note on more of the digital streaming media results, and then we'll switch into sort of the economics and then more traditional TV sellers. Did note Spotify as well. Ad supported revenue increased 3% year over year in a constant currency term. But one of the things after earnings, even, they announced that they are rolling out a verified program. Did you see this?
Yeah, I read a little bit about it, but yeah, what was your take on this?
So it's check marks for human artists,
Right.
basically, as a reaction to the amount of AI generated music
Yeah.
being submitted to platforms like Spotify. Deezer recently said that 44% of the music on its platform was AI generated,
Wow.
which is astounding. And you can imagine what that means then for text based platforms, because when it's a music based platform, you still need, some kind of specialized tool for that, like a Suno or something. But if it's
Right.
text, any of the free can generate text now. So if music is 44%, that just screams to me that like anything text based is maybe even higher than that.
Yeah.
But I love this from Spotify. I think we're going to see a lot more of that, right? And potentially not related to Spotify necessarily. I don't know what their plans are, but then you can see pricing tiers too, right? So are you
Mhm.
paying more? This is something we brought up in TYMY December a year ago. Are there different tiers where you're paying for like only human generated music, content, videos, whatever that is?
Yeah, no, it's an interesting question. I mean, to me, I'm just curious. I feel like most users, would probably create or curate, or I guess kind of create some sort of playlist based off of favorite artists and things like that. So I guess are people just not aware that a lot of this is AI generated? Because you would think that if a song or a track that you're not familiar with pops in, but I guess there hasn't been a lot of, I'd be really interested to see like consumer studies and data if if consumers even realize a lot of this is AI. I guess that's sort of the bigger question I have, that maybe consumers are okay with it.
Well, if you're, I mean, so much, again, so much is algorithmically driven,
Yeah.
right? So even if you start with an artist
You like, yeah.
and I listen to a lot of YouTube music, you will get suggestions that,
Mhm.
and I'm not a big music person, so
Right.
I'm not going to recognize names necessarily outside of, you know, top artists. And
Right.
I will often look up and not recognize the name of the song I'm listening to, I don't always know whether that's because I'm just, my music tastes are not broad
Yeah.
enough, or
Right.
because it's a copycat kind of thing, or because it's AI generated.
Right, exactly.
Yeah, I think there's probably a spectrum of people in terms of how clued in they are to all of that.
Right.
All right. Let's zoom out again because there is a lot happening outside of the world of advertising, and it does warrant
Mhm.
discussion, even though, as we said, is maybe not as influential in terms of market moves within our industry as it has been in the past.
Yeah, exactly. I think, some of the big news this last week was the Fed and holding the interest rates at 3.5 to 3.75%. So I think, we were kind of expecting that based off of, all the recent developments of the conflict in the Middle East. But I think what was really interesting is, without getting into all of the details, but the Fed committee was split on 8 to 4 lines with various reasons for their vote against it. And the last time that 4 members dissented was in October 1992, just to give that, some historical context. So it's been a long
Goodness.
time since you've seen it this divided. And of course, we have a new chairman of the Fed coming in who's, been pretty adamant about cutting rates. So I think, you're going to see some tension in there that we literally haven't seen for decades, and, how that can affect the economy, consumer demand, and advertising all in one swoop will be very interesting to see how it unfolds, especially throughout the rest of the year.
Yeah. Yeah, and inflation, I mean, a big topic, right? I mean, within the Fed discussions and everywhere else across Europe, was certainly mentioned by quite a few of the CPG companies that I track, and I know you
Yeah.
have some quotes from media companies. I think what stood out to me from the more CPG side was sort of between hedging and prep and the timing of supply chain constraints that 2026 may not be as impacted, but we may see impacts into 2027, basically.
Yeah.
Yeah.
Yeah, I
What are
agree.
you seeing?
Yeah, I agree. I think that sort of, that seems to be the consensus. It's real interesting, like on the media company earnings. It really, it came up a little bit, but you didn't see it as much. I thought an interesting one was for Comcast, because obviously the theme park business, but they said that they haven't seen any impact in the parks business caused by higher oil or any pullback on consumer spending. That was an interesting one. Of course, a little bit different from Mary Barra from General Motors, saying the number one thing that we were watching is what happens from the Iranian conflict. So obviously, a lot more concern from her part for obvious reasons. That definitely has a big impact on their products. And then we saw it a little bit too from Televisa, Univision, and their earnings call, that they said that as far, while consumer spending is down, we're not really seeing any direct impact from the war at this time, but obviously that they're going to be something that they're staying on top of. So they were a little bit more, aware of it and pointed out versus some of the other media earnings that we've heard from some of more of the traditional players so far, I'd say.
Yeah. All right. Well, let's dig into the TV world more broadly because we had Comcast, Rogers, and then Televisa Group as well.
Yeah, and I would say, without a doubt, the biggest theme across all of these was just sports and the impact of sports, especially for television. As we start thinking about it, it's almost like sports is becoming its own advertising channel at this point, rather than just a form of programming on television. That was pretty clear across almost all of the commentary. Now, of course, we're just coming off the Olympics, so we had that. We had the Super Bowl, so we had the legendary February for Comcast, which had an outsized impact on earnings.
It's good
But
branding that.
yeah, it was fantastic. Oh yeah, we also had the NBA All-Star Game thrown in
Hmm.
with all of that as well. But when you looked at Comcast on their earnings for their media segment, advertising was up 135%. Now, again, that includes Super Bowl and Olympics, but when you strip that out, domestic advertising was a more modest about 4.6%. So, again, you can just see the huge impact on these big cyclical events. And I know that's something we're going to be talking about a little bit more detail on our next TY.
Yeah, especially we're coming into the World Cup, as you mentioned. We have lots of sports rights looking at renegotiations coming up over the next year. Women's World Cup next year, very exciting. So, yeah, there's going to be a lot in this as we keep getting this cadence of events and how spiky that makes things for some of these companies. both in terms of
Exactly.
production costs and then also in terms of
Yes.
advertising revenue.
And advertise and I think there's a couple other interesting details, especially from Comcast, that there were, over 250 unique advertisers, with 60% being new to the Olympics. That's pretty decent sized number. Of course, you have a lot of it on content on Peacock as well.
Yeah, that's great. I mean,
Yeah.
as a fan of the Olympics, the more the merrier, I say. Everyone get involved. Very exciting.
Yeah, exactly. So I think, you're beginning to see that effect as more and more advertisers are, beginning, almost like I said, to think about sports as its own channel, and allocate budgets, to some of these bigger events, or maybe some of the minor major events, or some of the ones that maybe a tier or a rung two down from the massive scale of the Olympics and the World Cup. So I think that this is a trend that's definitely we're seeing throughout all these earnings.
Yeah, and so beyond, well beyond endemic
Yeah.
advertisers, right? So everyone wants to be in sports because that's where the eyeballs are. That's where people are experiencing things together again, which has big benefits for advertisers. So we expect to see more of that, not less, over the next couple of years.
Yeah, yep, exactly. And of course, speaking of big numbers from sports, when we looked at Rogers' earnings, their media revenue was up 82%. Now, of course, almost all that is attributable to their acquisition of Maple Leaf Sports Entertainment, which, mainly Maple Leafs and Toronto Blue Jays. So, it gets you starting to think: is Rogers more of a sports company now than a cable company? It's going to be interesting to see how that starts flowing through more of their earnings, and of course,
Well,
with the World Cup.
this is something where it's like ESPN taking a stake in the NFL. How
Yep.
much do we see this blending of media and league or team where, a blend of media sales and ticket sales, you just bring those two things closer and closer together?
Exactly. With, of course, Canada being one of the co-hosts for the World Cup, we should expect to see them, benefit from that cycle, and, again, more and more of an emphasis on sports.
Okay. Well, anything, do we just touch on Televisa Group? Anything else?
Yeah, and there was some pretty interesting in their earnings too. Again, sports being a huge theme. When you look at overall advertising, it was down 3%. U.S. advertising down 12% due to linear TV erosion, but Mexico advertising, this was an interesting one, up 13% to about 236 million. Now, there was some commentary on this that a lot of advertisers are already purchasing their commitments for FIFA World Cup, for which airs in Mexico. Of course, Telemundo having the U.S. Spanish rights, so it gets a little complicated with all the different rights in North
Mm-hmm.
America. But they did mention that a lot of advertisers are already, pre-buying, and this is going to be front loaded. So you'll see a lot of these commitments being purchased now, but they won't go until the World Cup starts airing later in the year. So it's, interesting. We've been hearing this a lot from clients too, just, getting in earlier and earlier on sports, and, buying it earlier in the cycle to try to, get those prices in locked as low, and also just due to the supply and
Competition.
the demand.
Yeah.
Yeah, exactly. So it's very interesting to see that actually, really being reflected in a pretty major market. And again, one of the other co-hosts for the World Cup.
So does this mean every brand, every advertiser needs to have a sports strategy now? That's what it feels
Yeah,
like.
it sure feels like it. It really does feel like it's carved out such a piece of the advertising world, that I think, depending on your business, of course, but I would say for most businesses, it, really makes sense to, examine sports and just sort of treat it like its own channel at this point.
Yeah. I mean, I guess we could broaden that out to other live or experiential
Yeah.
things, right? Like maybe if you're more aligned to music, you have a concerts and festivals sort of strategy, but certainly something in that world.
Yeah, exactly. It kind of all kind of, fits very similar criteria, but we keep on seeing this more and more, especially from the traditional media companies. Yeah, it's going to be very interesting to see this World Cup, and depending on how it goes, I think we're going to see some record numbers. Of course, there's going to be more matches, more commercial spots,
Yeah.
so that will definitely provide some tailwinds. But I think it's going to be a massive event.
Yeah. All right. We've got more earnings next week, plus more of our this year, next year analysis to be done. So, we're going to be very busy over here. We will try to continue our cadence, but just be on the lookout for new episodes as and when they drop. Otherwise, thank you for listening to the WPP Media Intelligence Podcast. Don't forget to subscribe. And if you have any questions for the show, you can email us at business.intelligence@wppmedia.com. As a reminder, the Media Intelligence Podcast from WPP Media is meant for informational and entertainment purposes only and should not be considered financial advice.